Hello. In this video, I'll help you get started on the Chapter 9 homework which tests you on the concepts of cash over and short, petty cash, and bank reconciliations. In question 1, Northwest Gift Shop, a retail business, keeps a $300 change fund in its cash register. The cash receipts for the period from April 29th to April 30th are shown below. On April 29th, there were cash sales per the cash register tape of $1,530. The actual cash count was $1,820. What do we need to do here? We started off with $300 and we had sales of $1,530. That means that we should have $1,830 in the cash register. But we don't. The cash count is $1,820, which means that we are $10 short. We start by analyzing the transaction. Cash increased by $1,520 because the cash count was $1,820, but $300 was already there. So, cash increased by $1,520. Cash is an asset, and assets increase with debits. That means we debit cash for $1,520. Sales increased by $1,530. Sales are revenue, and revenue increases with credits. That means we credit sales for $1,530. Last, we have the cash shortage of $10. A cash shortage is an expense whereas a cash overage is treated like revenue. So, here we have a cash shortage which is an expense and expenses increase with debits. So, let's record that transaction in the general journal. Debit cash for $1,520, debit cash over or short $10, and credit sales $1,530. What do you think we have to do for the second transaction? We started off with $300 and had sales of $1,437. So, we should have had $1,737 in the cash register, but we don't. We have $1 more in the register. How do you record that transaction? Okay, here is question number 2. On January 2nd, the Chelsea Legal Clinic issued Check 2108 for $270 to establish a petty cash fund. What do you think the entry for this is? The Chelsea Legal Clinic took $270 out of their bank account and put it in the petty cash box in their office. So, we know that the petty cash fund increased by $270. Petty cash is an asset and assets increase with debits. And, we know that the cash in the bank account decreased. Cash is an asset and cash decreases with credits. Please give it a try. Don't forget, use the option Check My Work to double-check whether you got it right. Alright, let's look at question number 3. On January 2nd, Valentina's Beauty Supplies Incorporated issued Check 3100 for $300 to establish a petty cash fund. On January 31st, Check 3159 was issued to replenish the petty cash fund. An analysis of payments from the fund showed these totals: supplies, $40, delivery expense, $81, and miscellaneous expense, $16. For the first part of this problem, we need to establish the petty cash fund. Please look at question number 2 or your textbook to refresh your knowledge about the journal entry to establish the petty cash fund. Now, let's look at the second part of this question. Valentina's Beauty Supplies paid for various expenses of $137 out of the petty cash box. That means that expenses increased and expenses increase with debits. That means, we need to record a debit for each expense, for instance, supplies debit $40. But, what account do we credit? We can see that a check was issued from the bank account, which means that our cash decreased. Cash is an asset and when an asset decreases, we credit it. Are you ready for question number 4? For this question, we need to prepare a bank reconciliation and the necessary journal entries. Jordan Corporation received a bank statement showing a balance of $14,550 as of October 31st. The firm's records showed a book balance of $14,139 on October 31st. The difference between the two balances was caused by the following items. 1. A debit memorandum for an NSF check from Richard Wolf for $421. 2. 3 outstanding checks, check 7017 for $121, check 7098 for $52, and check 7107 for $1,530. A bank service charge of $17. A deposit in transit of $854. Let's start with the bank balance. It is $14,550. We'll write that into our bank reconciliation form. Next, we'll write the book balance of $14,139 into our bank reconciliation form. And now, we are ready to examine the items that cause the difference between our bank balance and our book balance. The second item is for 3 outstanding checks. Can you see the section on the bank reconciliation form for outstanding checks? Write each of the outstanding checks into that section. Now, let's look at the fourth item on the list. It is for a deposit in transit for $854. The business already recorded the deposit, but the bank balance doesn't yet include this. So, we need to add it in the addition section. Please do that now. That leaves us with the first and the third item on our list. The debit memo for an NSF check hasn't yet been recorded in the general ledger, and neither have the bank service charges of $17. That means our book balance is too high and should be reduced. So, where do we have to enter the first and third item? Please write it in the bank reconciliation form now. Hopefully, your adjusted bank balance and your adjusted book balance are the same now. If not, please try to identify why it doesn't balance. That leaves us with the second part of this problem. We need to record the necessary journal entries. We only need to record journal entries for items that have not been recorded yet in the general ledger. If no entry is required for a particular transaction, select No Journal Entry Required in the first account field. For question number 5, we have Fiona's Florals, a retail business, which started a $250 petty cash fund on June 1st. There are 8 transactions related to the business establishing a petty cash fund on June 1st, issuing payments from the petty cash throughout the month of June, and then issuing a check to replenish the fund on June 30th. Your task is to record the transaction to establish the petty cash fund on June 1st in a general journal, as well as record all transactions on the petty cash analysis sheet. And then record the general journal to replenish the petty cash fund on June 30th. The first task of establishing the petty cash fund and recording the journal entry is the same as question 2 and question 3. Please review those questions or check your e-textbook. Let's look at the petty cash analysis together. We'll start at the top with the $250 that were received to set up the funds and enter it in the receipts column. Next, we'll record the payments that were made in June. Each amount paid is entered first in the payments column and then again in the distribution of payments columns. The total of all of those expense columns should equal the payments column. We'll start with the June 5th transaction for $34 for office supplies. We first enter the $34 into the payments column and then again into the supplies column. Please continue entering the remaining transactions into the petty cash analysis sheet. Don't forget to fill in the section at the bottom of the analysis sheet, and to record the journal entry on the 3rd tab and the analysis on the 4th tab. Please use the I Check My Work feature to double-check your work. I hope this video was helpful and it provided you with a good starting point for your homework. Don't hesitate to reach out if you have any questions.